Hi everyone, it's Jack about another video, and today I'm going to be talking about Abbvie. It's a Dividend Aristocrat, the 6th largest biomed company in the world by 2022 revenue, was spun off from Abbott Laboratories in 2013, has an excellent track record for dividend growth and stock price returns, not particularly this year where it's been down 8% year to date, but it's still well off its 52-week lows. In 2019, it bought Allergan, which is its largest acquisition ever, for $63 billion. That's still weighing heavily on its balance sheet. Allergan is the maker of Botox. They were trying to diversify its portfolio because they are under severe pressure because their main major source of revenue is Humira, that is facing severe competition from biosimilars. It's one of the best-selling drugs in the world and has been frequently the best-selling drug in the world. So I want to analyse this business, is it likely to keep paying its dividend? Can it keep growing it at the same rate? And what this company's prospects for the future, its drugs in the pipeline, etc. Then go over valuation, see if, with all this risk, is it trading at fair value? Is it below fair value, in my opinion? So let's get into it. The performance of this business has been excellent since its spin-off, and this graph only goes back to 2014, but the stock price performance has been absolutely outstanding, more than 3x in that period. The total dividend in that time has more than 5x, from around $1 to around nearly $6 right now. And trailing 12-month dividend yield has flirted between 3 and sometimes nearly 6%. Right now it's kind of at the midpoint of that, around 4%. It's fair to say that Abbvie's most recent quarter was tough. $13.865 billion in revenue, that was down 5% year over year on a reported basis. Basically because of Humira. For the immunology portfolio, of which Humira is a part, that was down 5.5% on a reported basis, 5% on an operational basis, to $6.813 billion, so around half of the total revenues. Humira accounts for $4 billion of this. That was down 25.2% on a reported basis year over year. In the US, which was nearly $3.5 billion of that $4 billion in revenue, that decreased 26% year over year. Internationally, almost 20% year over year. Obviously, this is tough. The remaining therapies make up around $2.7 billion. They were both up 50% year over year. These are going to be future blockbusters. They're going to do, more than $5 billion in sales each probably in the next few years. That's very impressive, both up 50%, but they're nowhere near making up the revenues of Humira, and this is problematic. The hematologic oncology portfolio was also down around 10% year over year. Imbruvica, the main culprit here, which is the largest of this group with over 2/3, that was down 20% year over year. The neuroscience portfolio was the bright spot really. It's larger than the hematologic oncology portfolio, so it's the second largest at nearly $2 billion. That was up 13% year over year. Botox Therapeutics were the real carrier here. That's nearly $750 million on a 10.2% increase in revenue, and a couple of others that were increasing at fair rates, but really Humira is the story here, and it is down significantly. The number of biosimilars for Humira is ever increasing. They're popping up left, right and centre. There's a number going to be released in July, which is only going to affect the results even more later in the year. The Amgen biosimilar that was launched in January has really affected Humira's revenues this year. It's slightly going to continue. I think the days of Humira's double-digit revenue growth are far gone. Maybe they can stem the bleeding and it'll still be a multi-billion-dollar drug in the future, and it probably will be. It's doing it did 20 odd billion in sales, 30% of the total revenue for the company in 2022, but it's under severe pressure. I could see it being a single-digit billions therapeutic for the next few years after maybe 2025, but it's tailing off. They need to find new growth from their other areas. Abbvie does have a reasonably strong portfolio outside of just immunology. Obviously, they bought the aesthetics and neuroscience segments from Allergan. They have 7 drugs over $1 billion, not including Humira, and they total $22.5 billion in revenue, which is just slightly more than what Humira achieved in last year. Now, these are all growing at reasonable rates, some of them decreasing, but the largest ones, the ones over $5 billion in revenue, are growing at reasonable rates. They're unlikely to replace Humira anytime soon. That's just a fact. Abbvie's pipeline is very strong. They have some HIV drugs in the pipeline. They have some anti-cancer drugs in the pipeline, and crucially, they have an Alzheimer's drug in the pipeline, which could be a major money maker if it gets FDA approval. Only time will tell, really. This is kind of putting your finger up in the wind type of thing. It's very difficult to tell with these sorts of things. Maybe it'll get approval, maybe it won't, but Abbvie has a very strong history of innovation. They have a good pipeline. I believe that they will get a decent amount of drugs and will eventually replace the Humira revenue. I just think right now is a relatively tough period to be an Abbvie investor. Next, I want to look at the valuation. It's clear to me that I want some margin of safety with this business. It has absolutely non-zero risk. It only has one real big problem in my opinion. That's Humira revenue. That is going down. This is a business that revenue is decreasing. I want to be assured that free cash flow is going to continue to grow, which it is struggling to do at the moment, and that the dividend is going to be safe, and this will provide reasonable returns going forward. Valuation wise, it's kind of mixed on the basic valuation metrics. Current price earnings around 33, that's greater than its 5-year average and greater than the S&P 500. On a forward basis, price forward earns around 12. That is also higher than Abbvie's 5-year average, which is around 9. On a price to cash flow, which is perhaps a better metric to use here because the earnings were depressed, that's around 10. That's almost exactly where the 5-year average for this business is. It's by no means cheap, cheaper than the index by cash flow, but overall, I think this isn't really giving a clear picture. I think it would be better to do a discounted cash flow analysis to give us a better picture and a clearer image. Abbvie average free cash flow growth of 18.4% compound annual growth rate over the last 10 years, which is obviously absolutely excellent, and 17.2% over the last 5 years. Even though they're increasing its adjusted EPS guidance from 10.57 to 10.97 to 10.90 to 11.10, I'm not overly confident that they're going to be getting free cash flow earnings per share growth anywhere near what you would expect previously from this business. I think last year's number of 6.7% is far more realistic for a conservative calculation. So I used a growth stage value of around 6%. I think this is totally achievable. Not a best case scenario by any means, but a reasonable good case scenario, not pessimistic in my opinion, just relatively conservative. Use a terminal stage growth rate of around 3%, which is fairly normal in my opinion, a discount rate of 10%, and that gave me a fair valuation for this business of $173 versus today's stock price of just shy of $150. Reasonable margin of safety, not an absolute bargain by any means, but slightly below fair value, probably close to fair value if you use slightly higher free cash flow numbers, maybe close to that 7%. For me, I still think I'd like the stock price to go down a bit more. I still think this business has a reasonable number of challenges. I think even to achieve 6% free cash flow growth rate will be a relatively decent performance for this business. And that's really where I sit here. On the basic valuation metrics, 10 times forward earnings is about its 5-year average, whereas the outlook for this business is far below its 5-year average in my opinion. Obviously there's a lot of challenges. They have a lot of strong pipeline drugs and they have growing blockbusters, but this business is 37% Humira, or it was in 2022. It is struggling and revenue will come under pressure. Free cash flow will come under pressure. In the next 5 or 10 years, I'm sure this will be a fine investment. However, right now, I'd just like to pay a cheaper price for this. I think close to 120, 130. Those 52 lows I've been much happier buying. This is not the case right now. I do think the dividend is going to be relatively safe going forward. It's a Dividend Aristocrat. It's been a priority for this business for a long time, and it is relatively diversifying across multiple segments. However, for me, I'm just not getting the margin of safety I want, despite what the DCF says. At this $150 price range, I'm much happier paying near those 52 lows, which I think is very possible because the next few quarters are going to be probably more of the same, maybe not 20% declines, but similar declines to this business. I think we can get to that 130, 120 range eventually, and I'd be much happy and much more interested in this business at those prices. But of course, that's just my opinion. I'm happy to be wrong, as ever. Abbvie is in a fabulous business over the long term, so maybe it will continue to be a fabulous business and completely figure this out in the short term. I don't think that's entirely likely, but that's just my opinion. And of course, I'm not a financial advisor. You should do your own research and due diligence, not just buy, sell or hold stocks because of my opinion. Because of course, this is just my opinion. You should speak to a registered financial advisor, and of course remember, your capital is always at risk. Let me know what you think in the comments down below. Like and subscribe and enjoy the video. I'll see you again next time.